there is a major supply issue when it comes to housing in the greater Golden Horseshoe. Like, it is so massive. And over the I've been doing this for 18 years now. If they had found the most brilliant minds in the world to come in and hired an MIT think tank to make housing less affordable and less accessible, they couldn't have done it any better than them trying to do the exact opposite. I've said this to the Minister of Housing. I've sat on panels. I've sat with Premier Ford. I've told them this. Like, they literally couldn't have done a better job restricting supply. And what you're really seeing is, and I explained everything kind of in 5 and 10 year increments. If we're investing in real estate and we're doing it for 6 or 12 months, it's probably not the thing you should be investing in. It's nice to have short-term gains because you feel better, you feel like you got in at a good time, but that's really not what real estate is. And over a long period of time, what I've noticed is, whether it's volume, whether it's price appreciation, it really, over a 5, 10, 15-year period, it does go back to the norms. So when we had a situation like 2017, which for sure isn't healthy, you don't want to see, double-digit growth, whether that's 10% or 25%, depending on what it is. It was simply a lot of people having demand for housing in a short period of time, and it ran it up. And what happened was government intervention. People talk about the foreign buyer tax. The foreign buyer tax did nothing. The foreign buyer tax is like the best headline to actually do nothing. We sold in 2021. In 2021, we sold about $3.2 billion worth of real estate in our portfolio, and about $1.7 billion in 2020.
So these are end unit
homes, condos, towns to the
buyers.
consumer.
Okay, yeah.
So $5 billion in 20 and 21. I think that we sold 1 unit to a foreign buyer out of $5 billion. So, like, I don't know what percentage of the market $5 billion represents, but it's not 1%, right? And I might have had 40 sales to foreign buyers in 18 years. So that, to me, is not really a big issue. So the price appreciation is going from the simple supply demand. The shocks of either things going up or down in the interim, whether it's low interest rates, whether it's a particularly low amount of supply. Like, right now, we have something like 94% of, I saw this stat the other day, 94% of all pre-construction condos are sold in the entire industry, 94%. Hasn't been that low since I started working. And we have some version of 3 months supply. And with the costs increasing, which we can talk about, development charges increasing, which nobody wants to talk about, but the development charges in Toronto went up $50,000 a door. So they talk about affordability, and they say, I want to have affordability, and I want to make housing cheaper for you. Inclusionary zoning is making affordable housing, which means it's a tax on everybody else. Development charges are going up, and the unions are in the middle of a strike in some cases, renegotiating wage prices. So we can talk about inflation, we can talk about 10% growth, but if we're 5 and 10 year investors, how can pricing go down? The supply is not increasing. The supply is staying the same or decreasing, and costs are increasing. So at the end of the day, I really like to sit there and say, I have a lot of faith in the long-term viability of investing in the Greater Toronto Area.